Daddy born poor, Mama was too. Walking through the snow, plastic bags on their shoes. Papa selling houses, sleeping in a car. 4 babies in the back seat, underneath the stars. Well, hey, hey, just work a little harder. Hey, hey, punching that clock with work and prayer and a little bit of luck. Make so much money, need a 10-ton truck. Ha, 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 ha.
Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. It is Tuesday, April 1st, 2025, 6:30 in the morning. I couldn't come up with a good April Fool's prank for us this morning, but if you want to learn how to currency trade, you need the right tools and the right mentorship, and we think we can provide both. And purpose of this session is to show you how simple and accurate our proprietary trading indicators are, so that you can make an evaluation for yourself how well they work. And I would encourage you to do our trading trial, and then you'll have full access to the indicators, and we'll give you a little one-on-one coaching so that you can properly evaluate them. So with that, let us we need to listen to this guy, and then we'll get going.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
We teach using a number of different tools. We've got videos. Well, first, let's take one step back. We've got a very detailed curriculum. It has been worked through for 16 years and fine-tuned. So there's a lot of information out there. And it's hard to know what's good or bad, and there just seems so much. It's like it seems daunting to try to learn. We've cut it down to specifically what we think you need to know to do this successfully, and we've then captured it in videos that kind of walk you through the path of learning how to trade. But it's not just videos. We've got the live group sessions. We've got the live one-on-one trades where an experienced, we've got live trades like this where an experienced trader comes online and kind of walks you through their process. By listening and watching their process, you're able to kind of replicate what they're doing. I do 3 live trades a week. We did one last night. That trade, 19 pip trade on the dollar yen, and that closed profitably within 3 hours. Tuesday, Thursday morning, every afternoon at 4:15, I do send out a trade setup. When you become a member, you get we do a live trade every morning at 10, another live trade every afternoon at 6. During the day, we send out a trade pattern alert. When you're in the trial, you'll get one a day. When you're coaching, you will get multiple trade pattern alerts during the day. Just on these alone, you'll be a profitable trader. Now, I've got a process I kind of work through, and I like to work off of a checklist. checklist helps keep me focused, make sure I'm not forgetting anything. If there's anything that you see during this session that you got a question on, best way to address it is just schedule some time with me, and I'm happy to kind of walk you through how things work and why this is a terrific program. You can schedule time with me at forexsmarttrade.com/schedule. Every morning I refresh my green chart. Green chart is our indicator, and that one keeps the memory fast and or clears out the memory so that the program operates fast, and it also picks up any updates they might have done. Now, one of the things that I think is essential, which doesn't matter who you've learned training from, is to actually go back and take a look at trades that didn't go the way that you thought. That needs to be part of your daily ritual. And our indicators have a simulator on them, so you can go back to the specific time that you took a trade and figure out why the trade didn't go the way that you wanted. And more often than not, there'll be some evidence left there of something that you did wrong or missed that by figuring it out, you'll improve next time around and not make the same mistake. We are technical traders. We are trading based on the price action. Our indicators are very good at giving us the direction of a move. And if we can figure out the direction of a move, we can make some money on it. But news does impact currency prices. So we want to know what news events are happening so we can basically trade around them. I like to look at Forex Factory. Forex Factory breaks news down into three components. Yellow, which is low impact. We ignore those. Orange, which is medium impact. I ignore those, but some people pay attention to these. And red, which is high impact. These are guys I want to trade around. And this morning we've got manufacturing PMI and Jolt's job opening at 10 a.m. on the USD. Usually I like to be out of a trade. I don't want to be taking a trade 2 hours before this window. So if we see a trade on the USD this morning, if we think it'll close in the next 90 minutes or so, we can consider it. If it's going to be longer than that, we probably want to stay away. The trade I am going to do this morning is something called the 10-point trade signal. We've got a dozen different signals. And when we coach people, we try to create a customized trade plan based around your availability to trade and your risk tolerances. This one suits me. It's the one I principally use, but you'll see, for example, on the overnight trade, I have a different strategy. And if this morning we can't come up with something, there's scalp trades there that we can use. Now, I like to trade off of a 1 hour chart. On a 1 hour chart, trade's going to close within 1 to 3 hours, so we get in and get out. On a 1 hour chart, trade's going to be worth anywhere from 5 to 35 pips. And my sweet spot tends to be 11 pips. If I can carve out 11 pips a couple times a day, I am making terrific money. And the strategy is simple. It's basically there's three parts to the chart. The majors and minors, which is the middle section, the TNTs, which is the top section, and the pressure, which is the bottom section. If I can get the lines from all three sections to agree, I've got a good trade. So let's see what we've got this morning. The chart we're going to trade off of is one of our standard charts, the Light 6 Major. It is a composite chart. It is showing me 6 different currency pairs. In this case, this first chart is all USD based pairs. I start with the middle section of the chart, which is the majors and minors. If I don't see what I want here, I don't have to look at the other sections of the chart. And to me, this is kind of the most important section. The other sections are giving me support as to what I'm seeing here. The red and green line is the major indicator. The black and gray is the minor indicator. This horizontal red line is the oversold line. Horizontal blue line is the overbought line. And basically, I'm looking for situations where we are overbought or oversold. If we're overbought, I want all the lines coming down, and I'm going to take a trade, ride it right through the channel here, and you can see a big down candle here. Or we're overbought, oversold, and the lines are going up, and then you see the two green candles here. And, so we're looking at 26 pips over the course of 2 hours. So I could have easily carved 11 pips out of there. So here, Australian dollar USD, we didn't make it to overbought, but we had a turn in the middle of the channel. Generally, I will only trade a turn if it's the Euro USD, a turn in the channel. Otherwise, I like to wait till we're either overbought or oversold to take the trade. So I'm going to pass on this because it turned in the channel. But we do see a turn in the channel here on the Euro USD. I guess what I normally look for is if we're overbought and everybody's coming down, there's four things I'm looking for in this chart. One, that we're overbought. So we didn't get to overbought. Two, all the lines are coming down. They are. Three, that the red line is crossed over the green line and the black line is crossed over the gray line. So I have that. And then four, I want the slope on the green line to be greater than 45 degrees, which it is. So I'm missing we started overbought, although the miners did make it to overbought. Then I would jump up to the TNTs and count how many lines are supporting this. These lines are kind of measuring the rate of change, and they're each measuring at a different speed. So the two orange lines are going down, the thick and the thin. So they're telling me sell. The blue lines are inversely related. So when blue goes up, that means sell. So dotted blue is going up. So 3 of the 4 are telling me sell. I want 3 of the 4 telling me sell. And then I would jump down to the pressure, and I've got the lines coming down. So supporting the sell. I want the lines either coming down or the red line on top. So I've got the lines coming down. Now, when I see this, I have a second step that I want to confirm. And that confirmation happens by looking at the 2 and the 4 hour chart. Now, so this is instead of having multiple pairs, this has got just one pair across multiple time frames. So here's a 2 hour chart, a 4 hour chart, an 8 hour chart, 12 hour chart, and a day chart. And my confirmation is I want to see the 2 hour chart, the majors. I want them overbought. And I want the same with the 4 hour chart. I want the majors overbought. In this case, they're not overbought. They're coming down midway through the channel on both of them. The reason I want both of these overbought is that there's less of a chance of us getting stopped out if this turns. Less of a chance of us getting stopped out. Here, there's room for it to go either way. Here, there's room for it to go either way. But if the lines are up here, there's far less of a chance of us getting stopped out. Now, the only thing that wants me to make an exception here, like I don't have what I want here, but I'm considering an exception because this guy's coming down steeply, green line coming down steeply, coming down. All the green lines are coming down across the board. So that's kind of an indication of a good down move. Now the question is then, what's it worth? And the other thing we have to take into consideration is that we've only got limited time here before that 10 o'clock news event. And I don't want to be holding a trade when that 10 o'clock news event goes on. So because I trade the Euro USD a lot, I have a chart that's got just a clean chart on it with just the price 1 hour candlesticks on it with support and resistance. And support and resistance are spots showing where kind of the candles naturally stop. So you can see it bounces. So when I make a trade, I trade, and these are usually 30 to 40 pips apart. Right now we're between 107.99 to 106 or 108.06. So this is only like 7 pips apart. So so we're really, it's from here to up here, which is about 15 pips. I want to know how much room I have from where I'm at to the next line, because I am going to trade between these lines. And here, it's only 5 pips. 5 pips. That's changed a little bit. So 6 pips. For 6 pips, I'm not going to take a trade. If it's not 11 pips, I'm kind of not interested. So there's not enough here for us to take a trade because I don't want to trade through this line because you can see it's kind of come down. Here it peaked through, but it's pulling back. So I'm going to hold off on this. Pound USD. Here we are overbought. Everybody's coming down. I've got the double cross, reds on top and blacks on top. He's kind of behind the green here. And I've got good steepness on the green line. So we've got all 4 things I'm looking for here. Here, thick orange coming down, thin orange going up. So I may have one of the 2 oranges, dotted blue going up, and thick blue coming down. So I may have 2 of the 4. Usually I want 3 of the 4 to be interested in this. But I do have the down pressure with red on top here. For just this heck of it, let's just see what the confirmation says. So that's pound USD. So this is what we were just looking at. We are not overbought. We're not overbought. So I don't have the normal confirmation I want, but this is coming down. This is coming down. Green's coming down. Green's coming down. So all the greens are coming down. Again, let's take a look at a full chart just to see. We don't have all the elements I want, so that's what kind of scares me off a little bit. So here's the pound USD. I want to know where the support and resistance are and what the trend is. So here there's a kind of a big uptrend, and then it seems to have it's going sideways the last 2 or 3 weeks. So once I'm looking at it, so here's resistance line. Here's the support line. You can see it bouncing. And here we've got 11 pips. We've got 11 pips up, or excuse me, down, and 16 pips back. Let's look at the chart one more time. I guess my concern is that we've got the news event and whether we can carve that 11 pips out. You know what? We've got like 8 more minutes. I want to see if there's something else before we decide on this because of the news event. Here, oversold. Everybody's going up, double cross. The red is just barely going up. And good steepness. 2 out of 4, and we don't have the pressure. So we're going to pass on this guy. Oversold, majors going down, minors going up, so we don't have agreement. Dollar yen oversold, everybody's going down, so we're going to pass. I've cloned this chart, and I've got non-USD pairs here. So euro pound, we've got disagreement between the majors and minors. Australian dollar yen oversold, going down. Euro Canadian dollar disagreement. Australian dollar New Zealand dollar oversold, everybody's going down. Pound yen, we had a turn in the channel. It's just reaching oversold, everybody's going down. Euro Australian dollar disagreement between the majors and minors. Again, I've cloned it. I've got more pairs. Canadian dollar yen turn in the channel. Again, I only will consider a turn if it's the Euro USD because I'm comfortable with that pair. Euro New Zealand dollar disagreement. Pound New Zealand dollar majors are kind of sideways. New Zealand dollar yen oversold, going down. Gold USD oversold, everybody's going up. Double cross, green and gray are on top. Good steepness on the green line. Only thing I don't like is green line. Well, green line, I'll consider a trade as long as the green line is less than halfway. It's just peeking over, so we'll consider that. 2 orange lines going up. Thick blue coming down, so 3 of the 4. I got sideways pressure, though. Sideways pressure. What makes it sideways is the green line's going up, the red line's going down. I want either the green line on top or both lines going up. Just for the sake of it, let's take a look and see what the confirmation looks like. XAU USD. All right, here, these are going up, this is coming down, this is coming down. So I want these both oversold. These are telling me that it's going down, this is telling me it's going up. So I don't have agreement there, so I'm going to pass. And then Euro Swiss franc oversold, majors are sideways. So I've cloned this again. Australian dollar Canadian oversold, going down. Swiss franc yen reaching oversold. Euro yen, everybody's coming down. Pound Australian dollar more than halfway. Everybody's going up, so we'll pass. New Zealand dollar Swiss franc turn in the channel, and Canadian dollar Swiss franc turn in the channel. So let's just go back to the pound USD. Pound USD. So coming down, we only have 2 of the 4 here, but we do have down pressure, and it's good down pressure. It's getting stronger. What makes the pressure stronger is the slope of the lines and the closeness of the lines. So they're getting closer, and there's, they're like the green is at a 45-degree angle. Let's take one more look at the chart. Nine pips. I don't like it enough. The news item at 10 scares me off. Let me look at one more thing. Oh, this guy's almost coming to us. The thin orange. He's almost horizontal now, coming down a little bit. You know what? My rule is to stay away 2 hours beforehand. I don't know that we can get this within the next hour. So I'd rather pass on a trade because you only need a couple trades a day to make money at this. I'd rather pass on a trade than take a trade that's going to cause me to lose money. And then when you start with a loss, you have to work that much harder to get back to break even. So I'd rather just wait. If we didn't have the news item, I would take this trade. If we didn't have the news item, I would take this trade. But because of the news item, I'm gonna hold off. If you want to, well, here I'm gonna just real quick just check one other signal. What I'm looking at is a little scalp trade that looks at what this is doing. It's called the thick orange line trade, and it's a scaled. Thick orange line is a scaled line. So when it's as low as it can go, this number is at 0. When it's as high as it can go, this number is at 10. When it is at 0, it thinks there's no more down in the movement. If there's no more down in the movement, that's a good time to buy, and it's worth 5 pips. So when I see this at 0, I then confirm it by looking at the position of the red line on the major indicator. And I want the red line on the major indicator to be below the red line, the horizontal red line, which it is. So this is usually worth 5 pips. Problem is on the New Zealand dollar, there's a large spread between the bid and the ask. See, this is at 10, but the red line's down here. I want them to be up here. this would have worked, but we don't have any time. Let me see. Boom, 0.04. Yeah. If you want, we could take a 5 pip buy on the Australian dollar, Canadian dollar. Let's do that. We'll take a 5 pip buy on the Australian dollar, Canadian dollar. So this was from last night's trade. So Australian dollar, Canadian dollar. I don't have that here, so I'm going to go to File, New Chart. Going to be down in this second group here, Australian dollar, Canadian dollar. My lot size is a function of what I've got in the account. So 1.16.61. I just moved this decimal place over 4 spots, 1.6. It's actually 1.62. I could take half of that to double it. I'm just going to take the half. I am going to take... what was it? AUD. We missed it. We're starting to miss it. A buy for 5 pips. Modify. 5 pips is 50 points. I click the little blue button. It does the math for me. On this trade, we can take a 4-to-1 based on the trade's accuracy. And then I want to make sure I get the full 5 pips. So I got in at 89899. So if I add 5 pips to this, it's going to go to 89999. 89949. And this should close within the next hour. So we took a buy on the Australian dollar, Canadian dollar for 5 pips using the thick orange line trade with a take profit of 0.89949. That's 0.89949 and a stop loss of 0.89688. 0.89688. I'm expecting this to close within the next hour. One more thing, when we were over here, this was at 0. Red line was below. Some traders, I'll usually take it before the new candle starts, but some traders do wait and they want to see this number jump by at least 1, which it did. So that's why I ended up taking it a little late. And you can see, had we taken it just a little bit beforehand, we would have probably got our 5 pips already. But we'll still get the 5 pips. And what you can think about on this trade, basically, when this is at 0 and the red line is below, it's like pulling a rubber band. And when the candle changes, there's a little snap, and that snap is usually worth 5 pips. All right. Have a terrific day. I'll see you this afternoon. If you want to learn to trade, you need the right tools and the right training. We think we provide both. We'll give you a chance to test it out and see, to feel comfortable. And we are so confident that this works and that you can make money that once we've trained you, we'll let you trade with our money and split what you make. So it's a win-win. You've got a mentor, somebody who cares that you do this well. We'll be working with you for a full year. And when you make money, we make money. So it's kind of a win-win for both of us. All right. Have a terrific rest of your day, and we'll see you tomorrow. Or we'll see you tonight when I do the overnight trade setup. Bye-bye.